Right, Paul, we're going to move on to your question. So, can somebody please explain to me the advantages of putting a buy-to-let property in a company rather than having it as an individual? And what percentage of the property's value would be loaned to a company on a buy-to-let mortgage?
Okay. So the idea of investing through a limited company is a little bit controversial as to whether it's the right decision or not and who it's right for. But in general, a lot more people have been investing through limited companies since Section 24 was announced. So essentially the removal of tax deductibility of buy-to-let mortgage interest. For example, I saw some stats recently. Before Section 24 was announced, only 5% of new buy-to-let mortgage applications were for limited companies. And in the final quarter of last year, over 70% were. So now the vast majority of new purchases are being made through limited companies.
Okay.
From a tax perspective, where it starts to sort of make sense to consider that is if you're a higher rate taxpayer, because basic rate taxpayers aren't actually affected by Section 24, and that's a common misconception that they are, but in fact they're not. If your employment income plus your property income is less than 50 grand a year, or 100 grand combined between a married couple, you're not affected by Section 24 at all.
Okay.
If you're a higher rate taxpayer, you are. So that's where if you've got properties with high levels of debt and that debt is less tax deductible than it was before, then assessing the limited company option might be worthwhile.
Okay.
It's difficult to move existing properties in, that can be costly, but perhaps new purchases can be made through a limited company. And loan to values and in fact rates now are becoming quite similar to buy-to-let in your own name. In the past, it was a lot more expensive and loan to values were lower. But because of that shift I mentioned toward this being very popular, competition has grown greatly. The rates are still slightly higher than owning buy-to-let in your own name, but they're getting closer and closer.
And what are lenders' attitudes to lending to start-up companies with no track record? Are they still looking
They
at
actually
the
prefer
individual? Do they?
Yeah, the vast majority of lenders prefer lending to a special purpose vehicle as opposed to an existing established company that's operating in some other right. The reason for that is it separates the risk. So if I own a laundrette with loads of debt and I want to buy a property in that same company and my laundrette goes bankrupt,
Sure.
well, that could affect the properties.
Yes.
Whereas, if it's in a separate company, you split the risk.
And what about the relationship between the sole director of the company and probably sole shareholder and the limited company? Are they going to look for personal guarantees?
Yes, they do ask for personal guarantees. For the business buy-to-let or limited company buy-to-let, it is a bit more about the purchaser, not just the property they're buying. As buy-to-let itself is more to do with the property you're buying than it is about you as a person. But they do look more at the person when it's through a limited company.
Got it. Okay.